So welcome everybody to the second of these 4 live webinars where I'm hosting around managing your credit. Now, for those of you who are more familiar with me, you may realize that I'm not in my normal habitat. This is not my home, it's not my studio. This is actually a hotel room in Sandton. And I'm fitting this live crossing to you just before I go to the Sanlam Journalist Awards this evening. So please keep your fingers crossed for me because I have been entered for the category of Consumer Financial Journalist of the Year award. So yeah, hoping to be able to win that tonight, or at least even become a runner-up or come second. That's okay. But it's really exciting for journalists to be, I think, recognized for the field that they work in. So just want to let you know that that's why I'm not in my usual spot. Now back to the topic of today, and as you may know, this series of live events is really about helping you have power really over your credit and making sure that it's not overpowering you. And that really starts with understanding the difference between good credit, bad credit, and how to manage the finances that you can access or the financing options that you can access. This series is hosted, is part of the campaign by Capitec with the hashtag Living Better Starts With. And you will see, of course, the hashtag running at the bottom of this video. And this is really about your goal. What is it that you want to achieve? What is it in your life that you can do that's going to allow you to live better? For some of you, that may be buying your first home, a really, really exciting experience. For others, it may be finally getting that last payment in on your car finance. For others, it may be finally paying off your credit card. So what I would like you to do is to please share these goals with me using that hashtag. And you can post those in the comment section on this Facebook Live event. And also please, whilst I'm saying it, whilst you are on social media, you can put it across Twitter, you can put it across Instagram, wherever it is that you want to be posting. But I want you to share with me your Living Better Starts With goal. And the reason you should really be sharing it with me is because you have an opportunity tonight to win a copy of my book, Money Questions Answered. So this is a book that I put together, which really looks at all the kinds of questions that you guys send to me. And let me tell you, I get a lot of questions from many people, and I try and answer as many of them as possible. But I can assure you, most of them are actually in this book. So one of you are going to be fortunate to walk away with a copy of that. But not only are you somebody going to be able to win a copy of my book this evening, but Capitec is including a grand 10,000 Rand prize for this month-long campaign. So at the end of the month-long campaign, they're going to select a winner, and that person is going to win not only 10,000 Rand, but also a one-on-one session with me to help you reach that goal. So you're going to have an hour with me to plan and find out how you can use that 10,000 Rand to achieve the goal that you have stipulated here in this comment section. So please keep those comments going. To stand a chance to win, you need to be watching these events, which you obviously are all doing, and sharing your goals on social media with that hashtag. But please also, if you are sharing it on social media outside of Facebook, make sure you include my handle at Maya on Money so we can pick them up. Please also sign up for the Capitec Credit Bootcamp series, which is a series of emails that's going to educate you on how to manage your credit better. The link is going up now on my Facebook comment section, so you should be able to click on it there. Right, now that we've got all that housekeeping out the way, I just want to move on to the topic for today, which is about personal loans and how to understand the actual costs and how to compare these. So, it's starting off with just simply understanding the difference between good credit and bad credit, or good debt and bad debt. It's lovely to wake up one morning and have absolutely nobody any money. But the reality is that during our lifetimes, we're going to need to access credit. What's important is that the credit we're accessing is helping us move forward in life. We we're borrowing money so that we will be better off, that we'll be able to build wealth. So really good examples would be your home loan, for example. We spoke about home loans last week. It's very unlikely you would be able to save up enough cash to buy your own home. So you would probably need to access credit for that. Car finance. Another really good example of something that you may need to borrow money for. But there is a difference between financing a car to get you to work and financing a lifestyle. Okay, so the difference in the price of that car and the affordability of the car could tip the favor away from good credit to bad credit. But there's a lot of other things that you could, maybe you want to start a business, maybe you need a student loan, just things that you need to be able to get ahead in life. Bad credit for me is when it's consumption credit. It's the stuff that, quite frankly, you should be saving for. It's not for the new shoes or a new phone or, those kind of things. Those are sort of things that you really should be saving towards rather than paying interest. And it's very important that you understand why you're taking on that debt and how you're going to finance it. So what I would like you to do for me is to post in the comment box a few points about, so those of you who are listening and are thinking about taking on some debt or some credit, you're looking and you're thinking there's some goal that you want to achieve. What I'd like you to do is to just post there and tell me what it is. What is it that you're wanting to borrow money for? Because it's very important to align the type of credit with the kind of credit facility. And I spoke a little bit earlier about making sure it's good debt and bad debt. So I want you to see from you what it is that your goal is, and making sure that we can, during the course of today, actually try and make sure that you're taking on the correct type of credits. So tonight is about personal loans. And typically a personal loan, you may need to take, say, for example, you maybe wanted to renovate your home. You don't have a home loan, so you can't access that, but you want to improve your house. You want to add value to it. Maybe there's a business that you want to start. There could be various reasons for you taking on a personal loan. And when it comes to credit, I would really prefer personal loans to something like a credit card, for example. And the reason for that is that a personal loan feels to me very goal-orientated. I know why I'm taking it. It has a term, it ends. I can take my personal loan for a year, 2 years, 3 years. So I know when I will be out of debt. And I also have a very clear idea about what my monthly installments are going to be. So I can work out my affordability. And this is incredibly important, is understanding your affordability, because this is where it all tends to fall over. And this is also sometimes why I'm not crazy about credit cards being used for perhaps goal-based needs. So for me, a credit card is more about cash flow during the month. You should be settling it at the end of the month. I wouldn't want you to be using your credit card for longer term debt. Rather use that as something for short-term cash flow, because it is a little less easy to manage and a little less difficult to understand the true cost of it. With a personal loan, you say, I can afford this installment every month and it is going to achieve this goal for me over this time period. And this is the date I will be out of debt. So that is very, very important in terms of a personal loan, and why I really want you to focus on it today. And the affordability aspect is critically important, because when people take out debt, and when you take out a loan, you have to repay it, okay? There isn't another option. You can't sort of think, oh, well, I just can't pay it this month. You have entered a contract. You have borrowed money from someone, and you have agreed to repay it over a certain period of time. There are two reasons why you need to pay back that loan. Firstly, if you don't, you're going to get into a lot of financial difficulty. And let me tell you, once creditors come after you, it is a downward spiral. It becomes a downward spiral very, very quickly. Interest compounds. You start getting what we call blacklisted. You can't access other credit anyway. It becomes very challenging. So on a very personal level, making sure that you can afford your loan is extremely important. But there's another side to it that I think people often forget. And that is when they borrow money from the bank, they think it's the bank's money. It's not the bank's money. Remember, the bank is a facilitator between a depositor and a borrower. So when you're borrowing money, you're borrowing someone's possibly nest egg. And if you don't repay it, that person could effectively not get their money back. And we have seen in this country banks collapsing because people did not repay their loans. And then those poor depositors who put their money in there actually stand to lose it. So think about it also from a society perspective. It's very important that we know that we need to repay our loans. Okay, so hopefully I've got through to you the idea of the importance of repaying your loans and making sure you can afford them. I just want to have a quick look here at your comments that are coming in to see which of you, who's financing what and what you're wanting to use your financing for. So we've got Labato, I want to borrow money for a rental property, and I want to ask a question on how APR, okay, that's the interest rates, affect my home loan. Does it help in deciding whether or not you have a good deal? Okay, so we did do home loans last week, Labato, so but absolutely, if you're wanting to borrow money for a rental property, you would want to be using a home loan facility, okay? A personal loan, really, I know some people actually will try and use personal loans for property, but you really get so much better interest rate using a home loan. And that's why I'm saying you must make sure that you're using the correct financing for the correct needs. Chokozele wants medical treatment for your son. And, that's the reality. Sometimes medical aids don't cover all the expenses that you need to. And when it's your child, medical bills actually are a really, really important factor. We land up with these medical bills, even though we've got medical aids, even sometimes it doesn't get covered, and you want to treat your son. So absolutely, you're going to look at that, you know what it's going to achieve. Just make sure that you take it and you borrow it in a way that you know that you can afford to repay it. Let's see who else. Mostly vehicle financing, not sure for new or used car work. So on vehicle financing, we talked about personal loans tonight, absolutely, but vehicle financing, okay, just a quick comment on vehicle financing, Damela. I only buy used cars, but I have written quite a few articles on that, and if it is also in my book, a whole section about why I think buying a used car, we can get into the debate. Borrow money to buy a house, absolutely, that would be a home loan. Is it cheaper to take out a personal loan to pay off my credit cards? Brilliant question, Wendy, because that actually is a very important point. If any of you followed Money Makeover, so that's a project I've run with City Press, we actually looked at that for one of our candidates. So he had over 100,000 Rand credit card debt. And it worked out that the problem with the credit card debt is you feel like you can never close the credit card, right? You're forever trying to pay it down, and then because it's still available, you'll end up using it, and you're actually not sure how long it's going to take you to pay off. So it gets into this kind of spiral. And in fact, in my fourth webinar or live event, I'm going to talk about personal debt and actually how, and looking at credit cards specifically. But sometimes it could actually be worthwhile taking out a personal loan and settling the credit card. But you need to then close the credit card. There's no point in taking out a personal loan and keeping that credit card open and getting yourself into a situation where you're back in credit card debt and you have a personal loan. So what I want to do now is share with you, Wendy, you'll find this very interesting, and all of you who are looking at taking out any form of debt, is how to look at the actual cost of that loan. So when it comes to making these comparisons, do I take a personal loan to settle a credit card? Do I consolidate my debts? That's a very popular one. Take out one loan to pay off all the other ones. You need to know what costs are you going to face, and how do you compare different offers. So I'm going to go to my share screen now, and I'm going to show you a few very interesting slides. So the cost of credit, a lot of people only focus on the interest rate. So all of you, if I had to ask you, you may possibly know what the interest rates are on your loans. You'll be surprised how many people don't know the interest rates on their loans. that we tend to focus only on the interest rate and not all the other costs. There are quite a lot of costs. In fact, there's 4 main costs that you need to look at when it comes to lending or to borrowing money. The first cost are initiation fees. So this is the fee that the bank charges you to open the credit facility. They call this an admin fee or whatever it is for the paperwork. This is quite significant. There is a minimum fee of 165 Rand plus 10% of the value of the loan that exceeds 1,000 Rand. So for example, if you were borrowing 2,000 Rand, it would be 165 Rand plus 10% of the value of that 2,000 Rand, should be 200 Rand. The maximum initiation fee that can be charged is 1,050 Rand, except that we all forget VAT. Add 15% VAT on it, and your maximum initiation charge is 1,207 Rand. Okay. Then once you've paid that, and that's pretty much by the time you reach 10,000 Rand you're borrowing, you're going to be paying that. Once you've paid that, you also pay the bank a monthly service fee. Now, this can be differential. It's one of the ones you can look at. I often don't see initiation fees discounted, but maybe, hopefully, Capitec will look at that. But service fees are another one to look at. That's the monthly fee that the bank charges to keep the credit facility open. The National Credit Act, which stipulates all of these fees, says that they can charge up to 60 Rand a month, excluding VAT. So it's actually 69 Rand a month. So that is added on. That's an extra cost every month. Then you may have credit insurance. I spoke a little bit earlier about making sure that you can afford your personal loan, but you also need to consider possibly taking credit insurance with that, because especially with COVID, we saw people losing their jobs. And if any of you are my followers, you will know I really championed credit insurance and made sure that the banks and the credit providers actually paid out on the credit insurance, because credit insurance basically covers you if you lose your job, become disabled, or die. If you lose your job, it will keep paying your installments. If you die, it will settle your entire debt. So it may be something you want to consider. The maximum that a credit provider can charge for that is 4.50 Rand for every 1,000 Rand that you've borrowed. So say, for example, you've borrowed 10,000 Rand, that would be 45 Rand a month that they are able to charge. That's per month, okay? And the fourth one, you can see, I've only put it as number 4, is actually your interest rate, finance charges. So the National Credit Act for personal loans caps personal loans at 21% above the repo rate. So the repo rate is that rate set by the Reserve Bank, and that's the one that they've been cutting this year so far. So we've seen the benefits in our home loans, some of us, we've been fortunate enough, but that's sitting at 3.5%. So if we add our 3.5% together with the maximum allowed, we're sitting at 24.5% is the most that a bank can charge you for a personal loan. Unless that personal loan is taken for less than 6 months, then they're actually allowed to charge you 5% a month on that loan. So that's where it can become pretty expensive. All right, so we understand all of these costs. There's a lot more costs than just interest. But how does that play out when I take my loan? So I have this example where you have a personal loan for 12 months. You're just borrowing, you said, I just need to borrow for 12 months. Maybe it's for your son's medical fees, for example, that we mentioned. You take the 10,000 Rand, I want to pay it off, I just want to take a 12-month loan. Remember, there is an initiation fee of 1,207 Rand. There will be service fees, that's that 69 Rand a month of 828 Rand over the full 12 months. You will have, if you take credit insurance, that will cost you 540 Rand over the 12 months. And I've put a 17.5% interest rate here. I haven't even gone for the 24.5% interest rate, okay? Because we're often attracted by the interest rate. We say, oh, wow, they're going to give it to me at 17.5, not 24. I'll take this loan, okay? So the interest over that period is 973 Rand. Your total that you're going to repay is 10,000 Rand of the capital plus 3,538 Rand in fees and interest back. So in total, you will repay 13,538 Rand over that 12-month period, which means that loan actually cost you 35%, not that 17.5% interest. and because only 973 Rand is interest. So it's very important to understand all of these costs and what that total cost is going to be. So I want to share with you a real story, okay? This is the kind of questions I get from you guys, and as you know, I try and answer all of them, but I wanted to share with you Vianney's question to me. So he contacted me, and he said to me, I currently have a personal loan of 65,000 Rand at 24% interest. My installment is 4,500 Rand. I have 22 months left on the loan. The bank, the same bank he's with, has offered me a new loan at 21%. So they're offering me a better interest rate, but over 58 months. My installment will drop to 2,500 Rand per month. Is this a good offer? So, of course, he's thinking the installment's dropping because of the lower interest rate. But actually, the installment's dropping because of the length of time, because he's basically more than doubling the period of the loan. And this is where we often get caught out. We see that we extend our loan for a longer period. We say instead of paying it over 12 months, I'll pay it over 24 or maybe 5 years, because it makes it more affordable on a monthly basis. But what is that impact on the total cost of the loan? So I said to Vianney, I said, go back to the bank and ask them to show you the difference, the total cost over the period of the two loans, so that you can make a proper comparison. And this is what he came back to show me. The current loan at 4,500 Rand a month for the next 22 months will cost him 99,000 Rand. If he took the new loan over 58 months, it would actually cost him 145,000 Rand. 145,000 Rand for 65,000 Rand. Do you see how important it is to understand total cost, and also to understand that time is money? So I wanted to just really highlight for you the importance of this, of understanding how these costs work. So I'm going to go back now to have a look at some of your and take some of your questions. Please remember to to put that hashtag with your goals, and also to follow that Capitec Credit Bootcamp link that's in the it should be showing on the Facebook comment section. Sorry, I'm getting distracted because I'm too busy looking at at all your questions. So let me have a quick look at what questions are coming a lot. Okay, yes, that is a lot of money to repay. So I want to be debt-free in 2 years. That's my financial goal. Okay, living better starts with. That is an amazing goal, to be debt-free. But I suppose also one has to decide, what does it mean to be debt-free? Does that include your home loan? Because that's quite a challenge. Or is it about your short-term debt? Is it about not having car finance and not having credit card debt? So I think one also needs to define what debt-free means. Because actually home loan finance isn't, I spoke about it last week and I showed you the benefits of paying extra into it, but it is what we consider good debt. So, and your assets are growing. And for me, I would rather focus on the shorter term debt, those higher interest rates, and pay those off first. Let's see. Yeah. Wow, thanks for giving me advice. It's interesting. When I show these numbers, I think it's only when you see the numbers reflected like that you start to understand the cost of credit, and which is why we're always saying make sure you fully understand it. I want to borrow money to fix my car, Patricia. So Patricia, that's a very good question. Your car is to get you from A to B. So again, I need to fix my car. It is going to help me get to work. It is going to improve my life, because I can tell you a broken car doesn't improve your life. So absolutely. But again, understand the costs, and make sure that you are able to pay that off and you're able to afford it. So Pamela, I'm just having a look here. Pamela, I was busy showing it to everyone here. Oh, clicking on the wrong button. So Pamela's Living Better Start With Me is to build up a tax-free account for my son's university fees and my little sister, age 18, who's in her first year at university, and my son, who's 14. So you want to open up tax-free accounts for those people and create a legacy for them with a better life than we had. I have to tell you, Pamela, it is such a powerful thing to do, to open a tax-free savings account for young people. And I'm going to share a little bit of a story with you. I actually started when my son was 2. I opened up an investment for him. It was just a very simple investment, nothing fancy. It just happened to be it just actually tracked the all-share index. To put in English, it gave me market returns, whatever the average market return was. And I started putting 200 Rand away for him. Eventually, I think the minimum went up to 300 Rand or whatever. By the time he was 18, you're going to be shocked. It was worth 160,000 Rand. And that's that power of compounding. So, Pamela, if you can start putting money away for young people and leave it, it will just grow and grow and grow and grow. And it'll be the best gift you could ever give them. It really is a powerful thing. Let's see what other people have commented on. Great. Let's see what other questions we're getting. Maya, why are debts so addictive, especially loans? I'm feeling upset with myself. Oh, Patricia, I love that question because it's such an honest question. It is so honest. And I must tell you something, Patricia. So I'm going to tell you a little personal story about myself. I was 32, so we're talking, my second son had just been born. So we're talking 16 years ago. I was in debt. I had just given birth to my son. I lost my job. My husband lost his job, and we just bought a new house. It was what I call like financial Armageddon, okay? It was just absolutely horrific. And that's when I decided to go freelance, and I started my own business. But it takes you a lot of time to build your own business and to get back on your feet. My husband found a job in a couple of months. It took him a couple of months to get a job, but his income was lower and with bonus potential. But we never adjusted our lifestyles. We just kept spending. We never really looked at what the impact of this was. And about a year later, when my husband got his first bonus, I was so excited because, we'd bought this new house and we hadn't had any money to fix it up or to buy anything for it. And I said to him, fantastic, we can use the bonus for that. And he said, no, it's got to go and pay the overdraft. And this overdraft facility, I didn't even realize had grown because I was just swiping my card and I was oblivious to it. So every time I went to the shops and swiped the card and it went through, I thought, well, we've got money. But it wasn't my money. It wasn't his money. It was the bank's money. And that was the biggest wake-up call for me. And I think that's what happens with us when it comes to credit. It is so easy. It is so seductive. If I go onto my banking app right now, it says you qualify for, and you kind of think, ooh, think about what I could do with all of that. I could have it all now. But there are consequences to that. And I think we do get caught up in it. And I think one of the worst ones for me is actually store cards. Store cards I eventually just closed all my store cards because I remember going shopping once. It was Christmas shopping. And I had a list and I was being all very disciplined for other things. And I had my store cards with me and there was some sale and I ended up buying more stuff for myself using my store card than I did for anybody else. So trust me, I have been there. I'm not talking about this like I'm some kind of perfect person. I have been there and I understand the seduction of credit. It is so available and it's so immediate. So I really do, I do feel for you, but we've got to put disciplines in place. We just have to, and we've got to be disciplined and, just don't take it. Maybe sleep on it or speak to a friend or, get a support buddy. And maybe the two of you commit to each other that you're not going to take on more credit, something like that, maybe. But it isn't always that easy. Which bank account should I start saving for my child in a tax-free bank account? You know what? Puleng, I don't want to talk too much about tax-free savings accounts now because I could be here for another hour. But this is actually quite important, is that if you're saving for a child for the long term, like I was talking about my child, my son, you really need to be looking at investments that grow that give you growth over and above just interest. So something like, so I'll tell you personally, my son's investments were with Satrix. And I would really encourage you to go onto my website, mayaonmoney.co.za, and type in tax-free investments or tax-free savings accounts. There's a lot of information on there, and I explain why and what kind of products you should really look at for children. Maureen, please in the next session address ways of paying off home loans in a shorter period. Maureen, I've got great news for you. Well, good and bad news. The bad news is I did that last week. Good news is it's on my Facebook page. So maybe Marlene, who's my social media manager, can quickly pop up the link. If she can't, just go onto my Facebook page. The recording is there. So you'll actually be able to watch the recording of that where I explained exactly how to pay off your home loan early. Arisha, is it advisable to take fixed interest rate on a bond whilst the current interest rates are so low? So again, I actually dealt with that last week, but it is a good question because I'm going to, so let me just make a comment. I dealt with a little bit last week, and next week I'm going to be dealing with interest rates and when to take a variable interest rate, when to take a fixed interest rate, and what that means. So I will definitely address that next week. But in the meantime, actually, it doesn't really help you to fix your interest rate now with interest rates so low, because if you go and ask the bank and you say, could you fix my interest rate, you're going to pay about 2% more to fix than you would be currently paying. You're far better off just paying extra into your bond. But I think I did address that last week, and I will definitely cover that again. Thank you very much. I see Marlene, my wonderful social media manager, has posted up the tax-free savings link for you there for Puleng who wants to know more about it. So I want to close, Martin. I want to close my credit card by December the 31st of December. Nice New Year's goal. Is a personal loan by the same bank worth it? I want to get rid of revolving loans. I am not a fan of revolving loans, okay? They are an option. Somebody will argue with me about this, but I'm not a fan of revolving loans. So I agree with you, Martin. So I think you need to do the maths. And exactly as I showed you earlier, understand the total cost. What would it cost me to take that personal loan? One of the things you need to look at is what is the interest rate that I would get. So although I spoke about all those other costs, which you need to add in, so there's initiation fees, the service fees, consider also what interest rate you will get. So sometimes we find that if you are taking a personal loan out and you have a pretty good credit record, you could actually even get a better interest rate than you are currently paying on your credit card. However, credit cards actually have, from under the National Credit Act, actually have a lower maximum fee, a maximum interest they're allowed to charge than personal loans. So you do need to look at the various options. But if you do it, then please just remember what you do need to do then. If you don't want to close your credit card completely, because I understand I have a credit card. Credit cards can be very useful. At least then ratchet your credit card balance right down to like 1,000 Rand or something, or 2,000 Rand, so that you've got it there to be able to access, but you're not going to get back into debt again using it. And then know and focus on that personal loan and have a date at the time by which time you will be fully paid off. Is it wise financial decisions to pay a loan of, I think it says 50,000 Rand of interest rate, 21%, with a new loan of the same amount at 17.5%? So Queen, remember, I don't know if you saw just now the comparison I did about total cost. The best way to do it is to say to the bank, could you show me the total cost of the first loan versus the total cost of the second loan? Because the length of time is very, very important. And I actually want to go back to that Vianney's example. So maybe I should just quickly share screen again in case some of you have just popped on and you may have missed it. But if I go back here to Vianney's question, this was a real question that I had. Hold on. Doesn't want to take me back there. Okay, I won't be able to do that now. I think I've exited that slideshow already. But in that example with Vianney, and this is actually a very good tip. So I said to Vianney, so Vianney came back and he said to me, as you remember, he said over 20, it was actually going to cost him more to change loans, because instead of it being over 22 months, it was going to be over 58 months. So the 22-month loan, even at the 58-month loan, even at the lower interest rate, was going to cost him more. So I said to Vianney, well, why don't you go back to the bank and say, thank you very much. I'll take the 21% interest rate as opposed to 24%, but I would like it over 22 months, the same period of my existing loan. And the bank said no, they wouldn't do that for him, because of course they wanted him to refinance for a longer period because they'd get more interest over that. So I said to Vianney, well, why don't you do this? Why don't you say, fine, I'll take the 58-month loan, but still pay the same installments you were on the 22-month loan, that 4,500 Rand, and pay off the loan sooner. There's nothing stopping you doing that. And that's a very, very important point. If you take out a personal loan and you take it out for 5 years, there is nothing stopping you paying it off over 1 year or 2 years. There's absolutely there's no penalties. People always have this perception that there will be a penalty. There's no penalties. You're allowed to pay off that loan as quickly as you want. So if that is the situation, if they come and they say, we'll give you the lower loan, but you have to do it over a longer period, we'll give you the lower interest rate, should I say, and over a longer period, you could accept it, but have the discipline, very important, have the discipline to pay an extra so that you pay it off over a shorter period of time. Any way to avoid high taxes? Maureen, I assume you mean on interest. Just keep in mind that you can invest your first, you don't pay tax on the first 23,800 Rand of interest. Thereafter, tax does apply. So that is one thing to keep in mind. And of course, if you put your money into a tax-free savings account, that doesn't apply. Any tax doesn't apply. On your salary, if you're trying to avoid high taxes on your salary, probably the only way to avoid high taxes on your salary is to put money into a retirement fund, because we are given a tax deduction for that. Thanks, Labatu. Yes, it is, or Susan. I know it's actually Susan. So thank you. Yes, it is an interesting topic, and it is eye-opening to see all those costs. Let's see if there's any further questions. Oh, my book. Oh, yes, that's a very good question. Maureen, is my book available in bookshops? This is this one. Actually, no. So what happened was, it was during COVID that I actually launched it, and no one could go to bookstores. So I created an e-commerce site on my website, My Own Money. I think Marlene has already posted it up. And what I found was that I could have it couriered to your doorstep for less. So the total cost of buying the book, it's 270 Rand. And that includes the cost to have it couriered to your doorstep. And I thought, you will actually pay more money to buy it in a bookstore because of their markup. So I actually think it is a much better deal to buy my book from my website, and it'll arrive on your doorstep. So that would be my advice to you, Maureen. Is it good to use retirement funds to pay your credit card and revolving credit? Leandra, no. This is a difficult one, because people do this. We get into this trap of drawing down from our pension, settling our debt, and within 5 years, I can promise you, or even 2 years, you're back in the same situation, because there is a fundamental mismatch of your behavior. Nothing's changed. You've taken on all this debt for a reason. There is something in your spending patterns, in your lifestyle, that's actually the problem. And all that you've done is you've stolen from your future self, because one day you are going to retire. And when you are 60, 65, you're going to say, I wish I had kept my money invested. I would rather, and maybe Marlene, if you can do a quick search on my Own Money page, I've got a great video up about how to create a debt repayment plan. And we're going to post that link on now, because For me, I would rather you created the discipline of having a plan to pay off your debt, because that will get you into a better lifestyle behavior than just finding lump sums to settle it every time. I promise you, you will not adjust your behavior that way. And it will just really have a negative impact on your final retirement. So I'm not a fan of cashing in retirement funds to settle short-term debt. Okay, I won't share my bank details to buy the book. It's all available on the website. It's actually quite a few options you have there. You can do an EFT, or you can actually even do it through a credit card payment, a card payment. So there are a couple of options there, but you can click on the link there that Marlene has posted up. And Marlene's also excellently put up the video, Create a Debt Repayment Plan, which would be my advice. Can I ask the bank to include my transfer costs to the home loan? Yes, you can. Well, let me put it this way, and this is relating to a home loan question. You can apply for, it depends what home loan you've been offered. So if you are applying for, say you're buying a property for, to say R1 million as an example, if the bank is prepared to give you 100% bond, it will only give you a bond of R1 million. So then you can't obviously add your transfer fees onto that. If, however, you're only applying for a smaller bond than the full R1 million, or sometimes, and it's not that common, that the banks may actually go beyond 100%. They may even give 110%. And the reasons the banks sometimes do that is they don't want you taking on perhaps some short-term microloans to finance that and getting yourself into financial difficulty. But if you go back to my presentation from last week, you will see where I speak about the importance of saving for that deposit and that transfer fee. So obviously, I would rather you prepared yourself for home ownership than taking on more debt. Unfortunately, I'm going to have to wind up in 5 minutes because there's some people downstairs waiting for the awards evening. So as I said, I'm keeping my fingers crossed for tonight. So I'm going to take just 2 more questions, and then I'm going to announce the winner for this evening of my book. And Maureen, a different subject, step-by-step buying of shares. Okay. All right. Definitely not going to be covering that tonight. Do not have enough time for that. But just as I have to say, Easy Equities, if you go onto easyequities.com, I think it was .co.za, they have done a brilliant job of making shares accessible to the public. And there's a huge amount of information on there. My only warning is, Maureen, I must just tell you, I'm an ex-stockbroker. That's actually where I'm from. I was in stockbroking. I worked for a stockbroking firm. I traded people's money for them. And I'll tell you, very few people make good investment decisions on individual shares because we need a lot of information. We need to spend a lot of time on understanding them. And we hear often, oh, if only I had have bought that, rather than often making the right decision. So I would say that if you're interested in investing in shares, start small, start playing around with money that you can afford to lose, and make sure that you have other investments that are just giving you the average market returns. But I think, I also do have quite a bit of that on my website as well. So I just want to check if there's any other questions that I may have missed, and then I really do need to get going downstairs. I've got people waiting. I see they're busy messaging me, but I'm enjoying my time here with you. Okay, the book winner for tonight is going to be Patricia. And the reason I've chosen Patricia as the book winner, so congratulations, Patricia. Marlene will be in contact with you for your details, is because she asked such an honest question. Just that, why is it so hard? And you know what? I cover that in this as well. I also cover that, and I cover a whole section on how to repay your debts and how to budget. And I share my story about getting out of the situation as well. So Patricia, I really, really hope that helps you a great deal. So congratulations to Patricia. And guys, next week, same time, same place, 5 o'clock, I'm going to be talking around interest rates and understanding them, because so many people don't understand how interest rates work. And I realized this when we had these interest rate cuts. How does it affect my home loan? How does it affect my fixed, I've got car finance. I had a fixed rate. Why has it not come down? What is the repo rate? What is prime rate? What's the maximum rate the bank's allowed to charge me? So I'm going to be covering a lot of that next week, and of course fielding so many of your questions next week. So you bring more questions, and please keep posting on social media that hashtag Living Better starts with, because remember, it's not just about my book, it's about that grand prize of 10,000 Rand and that hour-long session with me, one-on-one. And I do have to tell you that that's quite a prize, because I don't normally do one-on-one sessions. I just don't have time to fit it into my into my life. So it is a very special opportunity. Well, hopefully you think it's a special opportunity, but you will be able to pick my brain literally for an hour, and I'll help you be able to achieve that goal of yours. So thanks, guys, for joining me, and look forward to seeing you all next week. And also, please remember to click on all those links, the Capitec Bootcamp, Credit Bootcamp, which also answers so many of the questions that you guys asked this evening. So goodbye. I'm off to my awards dinner, and I hope you all have a fabulous, fabulous evening.